Greetings, everybody. Excuse me, this is Jeff Scott. This is my top-down review for the week beginning 10/31/2021. I entitled today, Earnings Lollapalooza, Market Rotation, and the Fed Should Make an Interesting Week. Again, my email address is hgsidoc@gmail.com. I welcome comments. Also, you can comment in the section below the video if you're on YouTube. In addition, if you're watching this and it's blurry, then you don't have the 4K version. It takes a while for YouTube to process it. You can always download the video in the commentary below the YouTube screen. This is for educational purposes only. Any recommendation in the spirit of education and should not be taken as investment advice. I'm a doctor, not a broker. I'm independent. I pay for the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I've learned from a lot of different people. I was often told by Ian that he's not a guru. He'd teach you to be your own guru. This is Ian here. And I think that makes the most sense. Learn from smart people. Many of the ones I've learned from are here, and then put it together in your own trading style. If you catch me during the day, you'll find a couple of monitors on. TradeStation, Thinkorswim. I forgot to put Wealth Charts is also on. And I use HGSI Edge Rater, and then indicator sets from a number of people, including John Person, Sagar from Cube, and then Dr. Keith Wade, who I'll mention later. I'm never paid by any vendor when you buy something that I suggest or use, and any affiliate fee offered to me is passed to the purchaser as a discount. I'm an unpaid volunteer, and this is just education. The website for HGSI, again, I'm not affiliated, except I love the program. Free 30-day trial here, and under investing strategies, you'll see hundreds of videos by myself, Ron Brown, and others that will help you get comfortable both with trading and using the program. Well, where are we? We've gotten through October and November, and we've gotten through at all-time highs. That is so weird, unusual. Now, it doesn't necessarily feel like an all-time high in my portfolio, although I'm up considerably on the year. And we've been very choppy here as we got to the top. Now, if I had to guess, we're going higher. We'll talk about that. We had our stock club on Tuesday night, and T.J. Watkins was on, and we talked a little bit about his Moxie trading and what he was seeing. And he saw some softness short term, and we certainly had that the next day. And then, boom, the markets went higher. We've really been in sort of a Darvas box pointing to the upside where we go up and down to the top of the range and come back. It feels like we're going higher, but, that's Sunday morning, not Monday morning, and we'll see where we are. We're clearly going into a better time of the year. If we're going higher, then we're going to probably put more of our cash to work buying stocks and calls and reducing the hedging. Hedging pays. Anybody that's been on this for a while knows that I always keep, well, not always, but I often keep some puts on my Amazon position. I trade with portfolio margin, and most of the margin's created by that position. And by putting puts on it, I don't have to worry about getting a margin call. Friday sector review, there's a lot of red there. So it was an interesting day where the indices were very positive, but not necessarily the underlyings. Look at REITs, for example, mostly red. Where was their strength? Well, there was certainly strength in healthcare, market rotation, some in industrials, maybe some in technology. But some of the things that had been strong, like materials were weak, energy was weak, even financials were weak. So clearly rotation has occurred in this market, whether it's short-term or long-term, only time will tell. If we look at major market indices, you're going to notice on several of them, this white balloon here. Well, this white balloon says it's the highest on the year. The white balloon here, I'm going back 12 months, is the lowest in the year. So we've gone from the low to the high. So that is clearly a lower left, upper right-hand corner pattern and showing the strength in this market. These are the S&P futures, the E-minis. What do I learn from this chart? I learned that we're at an all-time closing high. Pretty damn impressive. That, we've talked how many times we've hit the 50, the yellow line on the way up, that it took us a couple times to break through when we were below it. and now you're off to the moon. Now, obviously, we get corrections, we get pullbacks, but when I look at this and I combine it with the seasonality, with all the negative stuff and even the tapering coming, like people don't know the tapering's coming, this looks like a market that wants to go higher. If I look at the NASDAQ futures, same exact pattern. 52-week low was set the second day on this chart, and the 52-week high was set on Friday. How is this a bearish, anything but a bullish chart? It is a bullish chart. Again, not as clean as the other, as the S&P, where it broke through a couple of times, but we got back to the 50. Now, I actually expected a retest here, and we didn't get it. So corrections will happen. Corrections are to be expected. But if I had to bet bear or bull, I'm going to take the bull side. Now, this is the Dow futures, and notice it had its high of the year on Tuesday, I believe. But notice what happened. The close here is actually higher than the close on Tuesday. So we had an all-time closing high on the Dow, I guess, on Friday. And look how quickly, this is where we talked about Tuesday. After that bar, you expect a down day, and you certainly saw one, even enough to get a person sell signal. And 2 days later, we're back into a buy. So my guess is, again, we're going higher. Now, what has been pointed out is that the volume, look at the volume over here when the market was selling off versus over here where the market's gaining. The volume is less, although we did have some decent volume. If we look at the Russell, it's the one that looks different. The high in the year goes all the way back to March 15th or so. And we've been in a trading range that's narrowed. Now, if you just look at this piece here, you came back, tested the 200, you had the 17 in green, the 50 in yellow, and the 200 in red all coming together, and you powered off of it. So again, if I had to guess bullish or bearish, I'd say bullish. But again, this one is different than the others. Not much to tell you differently on the weeklies, but I'll put it up here for 1 minute. And you could see the new highs occurring, the sideways moving in the Russell, and not much going on with the VIX, and the dollar struggles below the 200, although it's well off the bottom. Let me change this back to the daily so I don't forget and mess myself up during the market. Now, another thing I like to look at are the expected move charts. And the expected move charts, remember what these are formed by, and these are really created by the option sellers, the market makers. And what they do is they price a straddle at the money, meaning you're buying a call and buying a put. And you're expecting a big move, you just don't know which way it goes. Now, the premium is the difference between the white and the green, which is also the distance between the white and the red. So if the market maker is collecting this much premium, as long as you close inside the green or inside the red, the market maker makes money. So you have to get a very big move to make money when you buy at the money straddle. Now, we know from past research that about 80% of the time, stocks will close here. So it's a special day when they power above it. So we can look this week. You start here at the close of the prior week. On Tuesday, we ran right up and reversed. That really looked like the market was going down. We got 1 day down and we turned around Thursday and Friday, and we went up, closing above the range on the E-minis. It's 1 out of 8 that happens. 1 out of 7. Here we are on the NASDAQ. Again, looked like for sure we gave it up here on Tuesday, and then we just went higher on Wednesday, Thursday, and closed way up on Friday. That is a massive move. Again, an unusual move. If you look at the Dow expected move, really didn't do much this week. Closed up from the open, but really stayed in a very narrow range, closing right above where it finished on Monday. The Russell played out the picture that TG thought we'd see, in that the market traded up, reversed. And the Russell came most of the way down, and Thursday was just a powerful reversal day in the markets, and it closed up. It closed near the top of that on Friday. So the expected moves shows how big of a move we had on the NASDAQ. The VIX, not much of a change, stayed within the move, as did the dollar. So how did that help me? It helped me alert me on Tuesday to expect a reversal. Just was interesting, we didn't get it. And then lastly, I also like to look at my long-term channels and notice how, well, make it easier to notice, we've gotten inside on the SPY. Now, won't that be great if that resumes that uptrend? Right now, that's my assumption. Can't get up there on the NASDAQ yet. I'm going to have to hope that we're not forming a new sideways move, which is possible. On the diamonds, we're back in and moving higher. And the Russell, we never left, the Russell being in that sideways channel. All right, so I look at this market, and it's hard for me to be really bearish, but I also know we've come a long way without a major correction, and we've got some potential market moving events this week. Underneath, rates eased. You can see, or you can't see very well, but both the 10-year and the 30-year rates fell. If the market is expecting huge inflation numbers, you'd expect it to go the other way. Falling rates, good for REITs, MLPs, utilities, dividend payers, and home builders. Have to admit, I don't think I saw much of that on my review. AD lines have flattened while the indices went higher in both the small stocks and the leading large stocks. White is the AD line. The colored one is the index. And you can see here on the NYSE, really didn't do much on the AD line, but all the major market ETFs, including TLT with falling rates, turned higher. Breadth weakened but not oversold. We dropped a little bit on the stocks above the 200 and the 40, and the 3-month new high, new low dropped, sort of in neutral zone. So again, the major indexes were up, but the underlying stocks were a little bit weaker than the prior week. The daily McClellan plowed higher, not so much on the oscillator and the summation index, which is up, but still below prior highs. So we're still working with divergences. Be nice to see us set new highs on both the oscillator and the summation index. Looking for a zero line recheck here on the weekly. The buckets, 59% of the stocks in S&P 1500 are above their midline. So a weaker day on Friday from a general market, but still most of the stocks are bullish. And you can see on the buckets, there's not a preponderance of stocks above or below their buckets. There was no evidence of a Hindenburg omen. You do have more new lows on the NASDAQ, but the classic Hindenburg is calculated on the NYSE. But regardless, you don't have a signal on the NASDAQ. Market tone is decidedly bullish. Now, it's an interesting market. I basically said here, growth leads as markets chop higher. You can see the positive here on the higher earnings per share. Low, no relative strength ranked stocks actually did well. Very choppy looking pattern here, kind of sideways in a very narrow range. But if you look at here on the group performance analysis from Friday close to Friday close, my stocks were up over 1%. The S&P 500 was up a little bit less than 1% using this model. But more importantly, look at the gold, the orange, which are the Investors Business Daily Growth Stock List. They certainly did well. What did the best up here was the Canaries. I've been talking about the Canaries for a while. Sector strength is mostly bullish. I look at the Woody indicator, which is this third band here, almost all green. If I look underneath, though, you could see on Friday, 3/4 of the sectors, half the stocks, and half the industry groups were negative. If you look at 2 days, you could see a lot better looking. If you look at 2 weeks, a little bit better than a 50-50 market. And over the last month, a little bit better than a 50-50 market. Here is the real-time buckets in Q Edge, again with similar findings here on the pie and the buckets that the stocks are in. Sector performance on Friday, over 5 days, you had only 2 that were positive, and these would be in red, and that included healthcare and information technology. As I mentioned, we saw some market rotation this week. If you look at strength over the month. This big thing here is energy, but it's been down the last 2 weeks. Clear rotation is occurring in the market. If I look at the sectors ranked in strength on Friday, healthcare, IT, and industrials, I showed you that on the individual stocks, but you could see these have all turned around from being laggards back here a few months ago and increasingly have gotten stronger, and they've been strong over the last 2 weeks. So I'm going to concentrate on the Q top-down review by looking at these three sectors. These were the industry groups. These are the ones I looked at. Hard to see, but there were a number of stocks. And these are two. And the MKSI was one, and Syneos Health the other, that looked like interesting pullbacks that I like, pullbacks on an uptrend to support and a big move up with some momentum, and it's a similar pattern on both. One of the ways I do top down during the week is to use the Q tools. Now I mentioned the Canaries were up a lot. Well, Canaries set all-time highs. Canaries are my thing, expanded, and it's not fair to say it's my thing. It's what Ian used to call the canaries in the coal mine. One of the things that Ian taught us is that you look for leaders, and you look for those leaders to fall before the market rolls over. Well, right now, canaries are leaders, and they're at all-time highs. So let's talk about leaders. How many of your stocks look like this? Probably a couple if you're lucky. This is an index of stocks. And what Ian taught us, and what we started working on in the virtual stock club, is let's build an index of the best stocks in the market today. And we're going to build that index because we know when this index rolls over, it's going to be a warning signal. So I identified current market leaders. I asked for prices above 5 and 500,000, really prices above 12 if I have enough stocks. Stocks look like a lower left to upper right, meaning this, lower left, start, upper right, finish. Not a buy list. These stocks are extended. I want the leaders, not the setups. I like 20 to 30 stocks. I limit the number in a single industry, usually to 2. I invited each of the virtual stock club attendees to send me their list. Probably 12 of you did. Thank you. I then went through the stocks yesterday, and I came up with my index, and I will attach an HGF file to my email that goes out to the HGSI users. I will track this list every day, and when it rolls over, I will worry about being long. Also, there's no reason to hold this list through a major correction because often on the next rally, the leaders may change. So here is my list. I treat it like a stock. You can see the industry group, which is the list, mimics the list. 8-day exponential, 17-day, 50-day free parking. This is the 100-day, the 200-day, and this is the 500-day moving average. Very bullish. Yes, I would not buy this stock today. The last time to buy this stock was here, but it's not a stock. It's an index of leaders. Now, who are the leaders? This is the leaders here. I will put it in my, I'll attach the HCF file, or you could write them down here. I took these from the stocks. People told me I should probably get rid of 2 semiconductor devices and an internet-based service and an application software. But these were the stocks that I liked. And you can't argue that that's a pretty impressive looking curve. Now, I invite you all, put together your own leaders list and try and beat my curve. And if you can, send it to me. Know your news and earnings. Wow. That's all I can say about this week is wow. You got some PMI and manufacturing on Monday. On Tuesday, you got the ADP. And then you got a Fed Reserve statement and a Powell conference on Wednesday. On Thursday, you've got productivity and a number of other things, jobless claims. And then on Friday, you get the big kahuna, monthly unemployment. That is a massive week of news. So certainly I'm feeling bullish right now based upon where the market ended. But I'm also smart enough to realize that this market is not without risk, and there's a lot of news opportunities. Then on the right hand side, you could see a zillion earnings announcements. I own Mosaic, so I'm going to have to make a decision early in the week. Avis was one of my buy lists. Generac, one of my biggest holdings. So I'm going to have to make decisions. DigitalOcean is in the new high list, or the leaders list. So I'm going to have to make some decisions. As I say here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts, I mean, you read it yourself. The indexes were up, big week in earnings, lots of EPS wins, and then concerns about supply chain. Value stocks, which are probably more susceptible to the supply chain, actually declined. Advanced Q3 GDP was weaker than expected, and the infrastructure bill is a lot stronger, at least the social infrastructure bill is a lot smaller rather than people expected, and that might have contributed as well. I would have been much better had I not owned Amazon, but fortunately Amazon puts saved my bacon. We need to prepare for some volatility as we have continued earnings, the Fed meeting, an announcement, as well as the monthly unemployment. It'll be interesting to see if we have softer economic news, if that tempers the taper talk and concerns. Definitely a week to be nimble. I will use my leaders list to keep me in the market, but if and when it rolls over, I will have my signal to exit. George Lee, may rest in peace, used to kid me about the Ian's, the boxes. And he would always look at the boxes and performance. Well, I look at the boxes and the leaders index to be somewhat similar. I use the boxes to identify stocks with the best fundamentals, specifically earnings growth, when the market has sold off, trying to find early leaders, okay? I look at the leaders list when the market's already run a long time, trying to find early stocks that are falling that give me a signal about the general market. So they're opposite things. The leaders index works best near a top, and the boxes work best near a bottom. All right, let's go take a look at charts. We'll start with TradeStation this week. Here's the E-minis. I look at 6 points here. Point number one, is it in a person buy or a person sell? It is in a person buy daily, weekly, and monthly. That's good. Number two, what's the color? Green means I should be buying or holding, I should not be selling. Red means I should be shorting or holding, I shouldn't be buying. And blue is neutral. Well, it's blue, green, blue. So that's medium. How am I compared to my envelopes? I'm at the top of the envelope, but as I could see in the past, we can run up that envelope, so that's okay. 4, do I have any of these red dots near where we are today? Those are signs of MACD divergence and could be a warning sign. And the answer is no, I don't see any red dots. That's good. I come down here, my weekly bongo is green, that's the middle of these three, and I'm at 70% on the high jump. So yes, I'm concerned that we're at the envelope, but I also know we can run right up that envelope. So I'm okay with the E-minis. Let's look at the Dow futures. Interestingly, the Dow futures sold off enough that they still have their sell signal on the John Person indicators, but blue, buy signals on the weekly and monthly. The weekly bond goes green. So the Dow hopefully will reverse that sell signal very quickly. The Russell, also in a sell signal. Now notice the Russell has these red dots. These red dots can occur for a while, but you usually see the stock sell off. Why the red dots? Because you had a higher high here and a lower high on the MACD histogram. And then lastly, the NASDAQ futures, almost too strong. 74% on the high jump, so it's not there yet, in a buy in green. So I look at the indexes, and for the most part, I think they look bullish. Now let's open up Hgsi. And I'm going to go into the market analysis groups. I'm going to 01, which is major markets. Whoops, I'm going to hit warehouse view. And then I'm going to find the S&P 500. or as what they call it, the pseudo S&P 500. Let me find it here. And then I'm going to open up the weekly chart. Awesome. All right. So let's do a top-down ranking and see where the strength was, at least on Friday. And bonds were strong. Whoops, hold on, it's not done yet. Here we go. NASDAQ and Dow were up the most, then bonds, transport, sort of confirming the Dow theory, right up to near old highs. Bitcoin was strong. There's my FANG, what was weak. Treasuries, TBF, high yield, dollar, gold, gas, ARC Genomic. Okay, so it was NASDAQ up on top is usually a good thing for me. Unfortunately, my biggest position is Amazon, but like I said, I had puts, but just like home insurance, you got a deductible, which is the premium. All right, so if I look at the S&P, I'm going to go very quickly here, all-time highs. I'm looking here, any evidence of a Phoenix or something? No, we're not at the high jump. Our Bongo weekly and daily are good. New highs on the weekly, everything looks good. The S&P looks fantastic. Let's look at the Dow Jones Industrials. Similar, retaking its highs. Pocket pivots. So bongos are green. In a person buy signal, what's not to love? At least for one day. The Russell 2000 futures, this is the one that looks, our ETF, and you could see how this is different in a very much a sideways move. But if all I was looking at was what's going on the right edge, I mean, it traded down to the moving average and bounced. So I'm not overly bearish. Notice that unlike the others, the long-term weekly bongo trend indicator says it's still in a downtrend. And then lastly, the NASDAQ, which is where most of the things that I buy live. And you can see the NASDAQ on the weekly breaking out to a new high. And look at all the pocket pivots. NASDAQ looks strong. And look, it did have some volume in the later parts of the week. So I think the indexes, again, look strong. I'm expecting higher highs by the end of the year. I am concerned about the volatility this week, just so I'm clear, because of all the news in the Fed and the earnings. If I look at the FANG, this is the pure FANG, you can see the FANG really went sideways. But think about that. That is despite the fact that Apple, Facebook, Amazon had challenges, although Amazon was up early in the week. So FANG is strong. And if I look at the IBD 50, probably closely reflects my stocks. Also looks good with a new buy signal coming in on Friday, still below prior highs. But small cap growth was definitely working, and that's, again, probably where most of the things that I own live. If I break down the NASDAQ 100, the big boys, again, despite Amazon and Facebook, look at that. Wow. If I look at biotech, biotech has been late to the game, and it's struggling at its 200. This might be the season that we start to see something as we rotate into healthcare. If we look at semiconductors, semiconductors look good, and I could tell you seasonality is favorable for semiconductors. All right, now we looked at these. What else do I want to look at here? Let's look at ARKK. Well, here's an innovation, the X. Just go through them. Here's FinTech sitting kind of sideways. Genomics below the 200. Innovation below the 200. Israel below the 200. Internet has broken out. KW. Airspace, nah. Innovation just doesn't look that great. This is Kathy Woods, probably her big one, but clearly might be looking for a breakout of this as well as the market resolves higher. If we look at the dollar, let's look at the bullish dollar ETF. Dollar's is right below its chandelier stop. It did trade down to the 50 and bounce, but remember, as strong as this move looks, it's still in a longer term downtrend. If the dollar had a good end of the week, then you know what gold did. Gold dropped below its major market indexes, or major moving averages rather. Silver also languishing below the 200, and gold miners not so good. So it really looks like the market is risk on right now. And stocks are the place to be. But again, we have Fed, we've got some economic numbers, and we also have a lot of earnings this week that can move the markets. Now let's go to 07, which is industrials. Which is the industries, not industrials. There's 174. If I do 2-day force up, I have 54. 2-day force down, I have 20. So we know that this is a strong market when you have most of the short-term momentum to the upside. I make sure I'm ranked by combo. I right-click, change index group with a left click, and I look at the things that are above the index. So I have a big position in TAN and I have a position in DQ. I've had both for a little while. Enphase and Solar Edge had big breakouts this week on earnings. Interesting, here's how good TA is. Technical analysis had a mobile breakdown, a person sell signal, and then the next day it gapped up on big earnings. Sometimes you just don't know what to expect. Probably too far gone. First Solar, also a big move up. As I mentioned, what I have is DQ, which is this one, and it also had earnings and broke out, gave up some of it. Why it's a red bar, but it's still a positive day. And if you want to play solar and don't want to play individual risks, you can play TAN, but TAN's already broken out as well. It could run a long way based upon what it's done in the past. So solar is the leading group right now, and a lot of them have had earnings come out. Automobiles, how great is Tesla? I made my comment during either last week or the virtual stock club is Tesla overpriced compared to the other autos? Are the other autos underpriced when you consider the electric vehicle revolution that's coming? Well, Tesla, Tesla, what somebody I listened to said 1250. Who knows when Tesla's going to stop? But how do you get on Tesla here? You buy it and you just hope, because it's, where would you set your stop? Back here at the Bible Gap update? It's so far away. It's hard not to be in it because it's such a powerful move, but you got to have risk and money management. So Tesla's great. We talked about going long quite some time ago, probably back here, and what a great play that was. Ford is another, and unlike GM, Ford popped on earnings, and you could see, like others, it sold off on the day before earnings with a person sell signal, a weekly bongo, a mobile breakdown, and then what happened the next day, they surprised. I think they sold off because GM did not have great earnings. So Ford's another way to play the electric vehicle. And both Ford and GM, I think, are going to catch up a lot to Tesla, but Tesla's got a big head start. This is probably a garbage stock. I'm now looking at the application software. You may remember support.com. Well, support.com was a stock that was probably a meme stock, went crazy. Then they had a merger with Greenridge. I actually owned support.com and I got out of it before the merger because it just was acting stupid. And then the merger was sort of a buy down because you ended up getting, excuse my French, hosed in the conversion. This thing actually had a huge day on Friday. It's um, a Bitcoin miner, basically. Not sure why they bought Support.com, US-based Bitcoin miner. On pure basis of the chart, it looks interesting. Probably up with Bitcoin. I just think it's probably a garbage story. Adobe, it's been going sideways after a big move up here, back near the old highs. Looks kind of bullish right here. It's an expensive stock. Cerner, breakout on Friday above the 50-day moving average in a squeeze. Pocket pivots, mobile breakouts. I like this pattern. What I don't like is it's right below the 200 and actually failed at it on Friday. Intuit was one that was considered and might be on the leaders list. What a great move. Just look at the weekly. That's one thing I talked about at the stock club meeting, is to look at weeklies. Would I buy it here? It's hard to buy here. It's a leader, but it's extended. You can't even see the high jump bar because it's already up against the top. Salesforce, man, I had some of this, still have some of this. This one's really turning into a nice mover. It was sideways after it did an acquisition of Slack, and then it just broke out with its last earnings. It's on a nice run. Maybe not too late to get it. I did not keep it in the leaders list because it was kind of loose because of what was happening over here. MongoDB, looks like it's setting up to go higher in a high base than the index. So a lot of nice looking charts, but not a lot of nice low risk buy setups. That's one of the problems with the market right now. NVIDIA, it's already gone. Is it a leader? Absolutely. Look at the weekly. Would I buy it here? I own it here. It's just you're now buying it in a risky position. I already have a cushion. Earnings are on the 17th of November. Wolf Speed, Bible gap up. Funny looking bar on Friday. Don't know anything about this stock. It's expensive. What's its market cap? $13 billion market cap. As far as I'm concerned, too far gone. Intel, no. On semiconductor. Well, if you want a moderately priced semiconductor that's not too far gone, that's in a decent setup, I thought On would play that. Uptrend, pullback here, got a little bit messier than I would have liked. Retook the 50, went sideways. It looks like it's breaking out here. A couple of pocket pivots, a kahuna, a mobile breakout, a John Person buy. Both bongos are green. So On semiconductor is one that you could possibly even look at buying here. Silicon Labs already broken out, and then we get to the index. So I always do this during the week on the top 10. So I have different approaches. On the weekend, I build a list of lists, and I look at about 1,000 charts, which is really a top-down analysis, plus the top 10 groups. During the week, I will look at the top 10 groups, and I will look at under custom groups, top 50, the most recent top 50. So between the top 10 groups and the most recent top 50, I'm almost always am going to find the best stocks in the market. All right, let's look at communication equipment. What do we have here? 810 Networks. I don't know if this was an earnings play or a buyout. A massive run. If you believe in Bible gaps ups, you could buy it with your stop underneath. I look at that as almost a 20% delta. I can't put a stop 20% away. I also look back and say, gee, this was telling me something was happening. I had kahuna, squeeze, and then a breakout. So beautiful setup. Didn't see it, didn't take it, probably too far. So I will go through, this is number 6, there's a couple here. This one looks interesting. I think my friend Kathy may have this one. She had it, Givo. When solar's doing well and the conversation about green is doing well, the fuel cells, the plugs, the renewable energies, Green Plains, Gevo, Ballard always seem to do well. You know, right now you're sort of languishing sideways below the 200. You got to clear your last conditional change. You got to clear your chandelier stop rather. You got to clear the 200. But this could be interesting. I'll watch it. I won't buy it till it clears the 200. Reggie is about to get there. And look, even though it's extended up here from the bottom, it should have a long way to run if it can get above the 200. It's got great earnings per share growth. Number 7, e-commerce. Look at Netflix. Netflix made my leader list. It hasn't had that great growth from the beginning of the year. It's had good growth. Maybe I'm understating it. It had great growth, but really the best growth has come over the last 3 or 4 months. Netflix is going into the season of Netflix from a seasonality perspective. eBay, sideways at the 50, sort of a belt hold day here. Overstock had a good earnings report, I believe, and gapped up. Chewy. Hgsi is interesting. It sold off a little bit and recovered on the Amazon earnings. I guess people are still buying homemade masks and other things from them. They still are doing very well, although their earnings per share growth has certainly moderated some. I don't pay that much attention to the earnings per share growth like this because it's already priced in. And if they beat their earnings, they're going to go higher. Large pharma, AbbVie, which is one that I like that sold off on some news, had great earnings, popped above its moving averages, 2 kahunas in a row, a pocket pivot, person buy, a mobile breakout, in a squeeze. I like AbbVie, and AbbVie is on my buy watch this week. It also pays a 4.5% dividend. Merck has a new pill for COVID. They're trying to get approved. I'd rather buy it when it's closer to free parking. Bristol Myers Squibb down there in the pattern. Pfizer looks interesting here as well. It's got to break out above the 50, but it's on a move up the bottom. It does participate in COVID because of its relationship with BioNTech. And look at the earnings per share growth. I believe they put their COVID revenue separate, but I think Pfizer looks interesting here as well. So big pharma, so healthcare. Steel producers. I think U.S. Steel really surprised on earnings. Big gap up. Now that's a doji for me here, so would it surprise me for it to trail down a couple of days before it resumes going higher? Absolutely not. Kind of reminiscent of the oil explorers. Look at the amazing earnings per share growth. If it actually hits that, if you're growing at 100 times or 200 times with real numbers, not with pennies, is a PE of 2.77 reasonable? No, this is one you'd expect it to see some multiple expansion as well as these big earnings. This could go a lot higher. Nucor popped as well, but closed in the bottom of its day. I only look at the ones above the index, and then internet, investment companies, so SPACs and others. Fisker is an EV company. It probably should be reclassified. Well, that's interesting. Why it shows up under investment companies here, I don't know. Maybe it was a SPAC. I think it was a SPAC. Nikola's another EV company. Bitcoin, now you can play futures, all kinds of different ways of playing it. Just off its all-time highs. Bright Sphere Investment Group, don't know the story, broke out, Bible gap up. I don't play this group very much. If I'm going to play investment companies, or I'll play an asset manager, I'm going to play something like KKR, or I'm going to play BX, Blackstone, both of these are doing very well and pay a dividend. So not necessarily your household names on the top 10 groups. Let's look at my buy watch list for today. I have one of those. So if you look on the right, you can see some application software, biofuels, medical equipment, renewable energy, semiconductor devices, specialty pharma. I'll run through them very quickly and say what I liked about them or what their fleas are. Darling is an agricultural chemical. Earnings are coming up this week, so that's a negative. Good earnings per share growth breaking out here. Talked about it for a couple of weeks. Triumph Group is in the airline. Boeing seemed to have a decent response to its earnings. They're starting to make more planes. This one's about ready to break out. Here is a Bit Digital. This is a Bitcoin miner. Digital Turbine Apps has weathered apparently the Apple privacy things. It sold off hard when others were having issues related to advertising, but it recovered quickly. Great earnings per share, past O'Neill model stock. Matterport, don't know it at all, but love the pattern. Pullback, bounced off the 50, big day. Bible gap up on Friday out of a squeeze, mobile breakout, new person buy at Kahuna. It's an IPO, so I don't have much history on it, don't know anything about it, but I love the pattern. Tesla, we've already talked about, maybe too extended. Gevo, we talked about. Green Plains is another one of these biofuel companies. Ethanol company breaking out. So this is not my leaders list. These are potential things I could buy on pullbacks. Laureate Education, pullback to the free parking. In a squeeze, had a mobile breakout, pocket pivot in a Kahuna. I might wait for it to take out its chandelier stop. Blink Charging, not a great setup in that it's below the 50 and the 100, but multiple Kahunas in a row. Excuse me, a new person buys still on daily and weekly. If we're all driving EVs, we need a place to charge them. Church and Dwight, a consumer staple stock, pays a dividend, broke out from a long base. Clean Spark took out its 50. It's already moved up, but look how far it's come down. It took out its 200 here, which is bullish. Gartner, IT company, probably one of the better setups, sideways move and breaking out. Microsoft, great earnings. Look at all the pocket pivots. Look at the volume that came in at all-time highs. Probably maybe late, but who knows. DigitalOcean, clearly this is late, but at least you're getting a chance to buy it off of a sideways move if it breaks out. This is in the leaders list. Shopify, with Amazon's really strong close compared to the open, after laying a big egg on earnings, revenue, and warning, maybe it's time to start looking at these stocks. When the stocks behave better than you expect after bad earnings, maybe that tells you something. So Shopify has taken out its 50 here. It looks interesting. We already looked at this one. Booz Allen, a consulting company, IT company, sideways move, broke out here. Kahuna, pocket pivots, person buy, mobile breakout from a squeeze. AbbVie we mentioned, Pfizer I mentioned. Zinn, integrated shipping services. I've got a couple of these I looked at. I'm a sucker for earnings. Great earnings per share growth. It's an IPO. think it's an Israeli shipping firm. InMode, a medical device company, also on the leaders list, got a little bit loose, but has had an amazing run. Catalent, another healthcare company, equipment, pullback, getting ready to break out here. This is probably, again, one of the better setups, lower risk buys. Tandem Diabetes, one of my current holdings, breaking out again at all-time highs. Ladder Capital, mostly a 6.7% dividend in a stock that looks like it wants to go higher. Life Storage, one of these storage properties where you buy like a garage. Had one, my wife let me get rid of it. Pull back, breaking out. The entire sector, entire group of these are doing well. I think the rental economy and other things, people are finding the need. Array used to be a Array biotech company. This is a technology company in the solar space. It's a fallen stock, but solar strong, and it looks like it's responding to solar. Smooth. Here's Ballard Power, another one of these alternative energies, well below its 200, which is a negative. DQ I mentioned. Shoals Technology, another renewable energy, IPO. It broke above its 50. I like that. Two kahunas, pocket pivots, mobile breakouts, down person buying a squeeze. Just it's a crappy looking pattern. It's an IPO. It really hasn't formed a good pattern. Clearway Energy, previously Energy Yield, which I thought was utility, breaking out here. Great earnings per share growth, pays a 3.7% dividend. That looks very interesting. NVIDIA we mentioned, we mentioned. Applied Materials, really a sideways move like the Russell for quite some time. Eventually it's going to break. It's probably going to break higher is my bet. I let it break out of the box before I would be chasing it. And if you want retail, it's a similar pattern. I would draw a line across the tops and look for Abercrombie and Fitch to break out. Its earnings are not for 3 weeks. Probably a big way to play lithium is Aberley, ALB, breaking out, sort of a cup handle breakout. Big volume, kahunas, pocket pivots, person buy, mobile breakouts. Not a cheap stock. Anavax, a specialty pharma stock, let it break out above the 200. I get suckered in by the multiple kahunas. Neurocrine Biosciences, they've got marketed products. You can see they have revenue, they have earnings, and they've broken out here, pulled back, and look like they want to run again. Let it take out its PSAR dot, but you got to squeeze, a mobile breakout, a person buy, pocket pivot, and a kahuna. Showed you steel. Here's a coal company. I have a hard time buying these because coal's going to go away, but it hasn't gone away yet, has it? And this is Suncoke Energy, right? Buying off a constellation of the moving averages in a squeeze with a new mobile breakout, person buy, and kahunas. 3.3% dividend. Waste Connections, the waste stocks look pretty good. This one looks like it's breaking out. And those were some of the top stocks I thought for my buy list. Now, last week, we talked about SCI. And SCI behaved. So I said I was going to buy it if it closed above the high. See, Friday, Thursday, Wednesday, Tuesday, Monday. So we set a buy stop above here, and I did a butterfly, and for the butterfly, the maximum gain is at between 70 and 75, but I've already doubled my money on that butterfly, and it's a broken wing or a broken butterfly in that even if it goes above 80, I did a 60, I think I did a 60, 70, 75, I think is what I did. And if it closes above 75, my $4 is worth 10. If it closes above 68, my $4 is worth 8. So as long as it closes above 68, I'll double my money. If it closes anywhere between 70 and 75, I'll do even better than $10. So I had a nice move on the call. I bought a large number of them around the butterfly. Why did I buy the butterfly instead of a straight call? Because it was 50 cents cheaper. So I had a nice move. I'll close out the short part of the butterfly for basically pennies. And now I'll let my call run until the end of the month with a stop. It was a simple trade. I had to take out the prior high, which I did. Gave up a few pennies for a couple of days, and then I had a nice breakout on Thursday. And Friday did not end well, but it started off pretty strong, and that was Service Corp. So let me just put up before I say goodbye the my keepers. I call it the keepers list because what happened was during the meeting, I had people give me a list of stocks, and then they sent in. So I had about 100 and something stocks here. These were all the ones that were sent in, a little bit over 100. And then I weaned them down to the keepers list. So this is the list of stocks that are in my leaders index. So what you're going to do if you're an HGSI user, you're going to highlight users group. You're going to go file, and you're going to go to import. And I'm going to attach to the email I send out this thing that's called Keepers Leaders Index. And all you're going to do is highlight that, and this is going to import it. And you will have your very own Leaders Index. And then you're going to want to generate an index for it. If it didn't generate one automatically, build an index. Then I come down here, I can probably find an index here. And you'll be able to study this on a daily basis as well. So on that note, I'm going to say goodbye. Thanks to those that joined us earlier in the week. You'll see an invite sometime later this week for the November one. And Dr. Keith Wade, Seasonality Trader Pro, will be joining us. Thank you. Have a great week.